What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, we're going to be going over Tesla stock. I've had a lot of people recently ask me about, am I going to be selling my shares? Am I going to be buying more shares? And what do I think is going to happen with the stock? So we're going to go over that stuff today. Just by looking at Tesla stock, you can see it's down over 60% from its highs. And the sentiment around the stock is really bad right now, largely in part because of Elon Musk and what he's been doing with the whole Twitter situation. He's been selling a bunch of Tesla stock to fund the Twitter deal. So that, of course, is not a good look, and it's making a lot of investors unhappy. But that aside, let's start with where I'm at in my position. So right now I have 135 shares, average cost of $18. And it looks like I'm up a lot on this stock, but to be honest, when it feels like I'm down a lot because I was up 1,500 or 1,600% at one point. So there's that. But I went back and looked at, so this is about a third of my position I have left. The other 2/3 I sold at December 2020. I sold my first fraction of the shares. Then I sold another third on November 8th of 2021. And that, if looking back, that was right around the peak. That was pretty much at the peak it reached. So I actually sold it. I'm actually very happy with where I sold my stock at. And I'm happy with the fraction I have left, because I definitely don't plan on selling any at this price. Buying it, I don't know. I don't know if I'm really interested in buying either. I am up 700%. And as you can see, this is about a quarter of my entire portfolio. Not my entire portfolio, but this portfolio, because I have a separate account. But I have so much in this. This is such a big chunk of money in this stock. I don't think I would want to invest more. I kind of just want to hold on to these shares and see where it goes over the next 5 years. I think the opportunities for Tesla and the industries they're in are going to be so big 5 years from now. I really want to stick around to see what happens. But let's get started with the checklist here. So first up, we have, is the stock down over 30%? Absolutely. That's going to get a check. Is the revenue net income improving? Yes, it is. If we want to look at that, we can see that they've definitely grown revenue for the last however many years, and now we're up to $53 billion of revenue. Net income has been negative for a lot of the company's history, and 2020 that flipped. 2021 we had $5.5 billion of net income, and 2022 should see even more. So great numbers there. Then we're going to get into the PE ratio. And the PE ratio is also something that's highly debated, because right now it's trading at around a 40. I believe from my calculations, it's a 40. It's probably more accurate, but on Yahoo, and then we have a forward PE ratio of about a 28. And again, that number is probably a little bit even lower. But in the past, as you can see, this stock traded at insanely high PE ratios, all the way up to 400. So now, if we're talking it's at the 40 range, that seems very cheap from where it was a year or two ago. With that being said, some people will still say, oh, I think, it could trade at a 30 possibly, right? But we'll see if that happens. I don't know about that. If you look at the stock chart, you can kind of see, I feel like the next, this was one resistance point right around that $200 level. And then as you can see, it broke through that level. It looks like the next level is going to be about $140, $145. So that's probably where this stock will bottom, right around $145. And then I think it's going to start going back up. Let's get back to our list here. So yeah, I think right now I'm going to call that a healthy P ratio of 40. Number 5, is the company innovative? Do they have a moat? Absolutely. I think this is one of the most innovative companies on the planet. Innovative not only with the whole electric vehicle thing, but also with the autopilot. As you can see here, they have several other products that they're working on. They have a lot of AI, artificial intelligence incorporated into their products. So they have all these chips. And then they have this wild card, which is the Tesla robot. And nobody really knows how that's going to play out. That could, be a huge thing and make them billions of happens with that. But I think they're very innovative. I think they have a huge moat. I think their brand image is very strong. A lot of people, when they think electric vehicle, they think Tesla. And so that's a great thing to have, especially when you're in the industry that they're in, that's growing so fast. So that brings us to our next point. Is the industry growing? Yes, not only with electric vehicles, but also with renewable energy. They're in energy storage, they're in solar energy, they're in automation and robots, they're in artificial intelligence and software. All these different things are all growing industries. That's why I'm really happy to hold on to these shares. And if we take a look here, we can see these are the top 13 companies, the biggest companies in the world, organized or categorized by the amount of revenue they do. So number one is Walmart. But the point I want to make here is the majority of these companies are either in energy or they are in automotive. So since Tesla's in both of those, that means really they have trillions of dollars of opportunity that they can take some of that market share. And that's really what I'm looking forward to. Next up, we have how is the return on invested capital? Right now, it's 31%, which is phenomenal. That's really impressive. Right now, we're at 31%. Years ago, we were negative, and so they've definitely made huge improvements there. Then we get to a very solid number, and this is also one that's, you know, in 2018, we had negative 20% profit margins, and pretty much every single quarter afterwards, they've managed to improve that number. And I think it's going to continue improving because I think, you know, economies of scale and the more business models they get into place, the higher that number is going to go. Then we get to cash flow. Cash flow also looks incredibly strong for this company. Let's see here. So cash flow has gone, their cash position has gone from $4 billion to over $20 billion, and their free cash flow was negative for you. Definitely going to get a check. Then we have diverse revenue streams. Yes, how I said, not only with the whole automobile, the semi-truck, but they also have Tesla Insurance. They have the energy storage business. They have robo-taxis coming out eventually. And not only, you can think of this in terms of products, but you can also think in this in terms, I like to think in terms of customer concentration. So the other good thing is they're expanding where their factories are. So they have one in Shanghai. They have a couple in the United States, and they're having one in Berlin. So that also helps too with the business. They do have positive equity, so that's good. They don't have over 10% of the market cap, so that's going to get a no. Share count decrease, no. It looks like it averages about, I think it's up 5% year over year, which is not great, but this is a fast-growing company that's, you know, up hundreds or thousands of percent. So 5% is not a huge deal. Are insiders interested? The main person I think of here is Elon Musk, and since he's selling so many shares, I have to give this a no. Is the management respectable? Yes. I mean, this is definitely debatable. I have always respected Elon Musk and his decisions with the company, so I'm going to give this a check. And it's not only about Elon Musk, it's also about the other management there, the other team members, the other engineers. I've heard that they have lots of talented people working there, so I'm going to give that a yes. Then we get to, our current assets more than average earnings. Yes. Earnings were about $5 billion last year. The current assets, I believe, are at least over 20, if not $30 billion. They do not pay a dividend, but that's not a big problem because we don't need a dividend when you have a company growing this fast. And then, is the company over 20 years old? I put yes, but technically it's not. It was founded in 2003. So in about 2 weeks from now, it'll turn 20 years old. Then down here we have, there's a couple things I want to point out. So first is on their 10Q. Here we can see where their different factories are and what vehicle models they're going to be producing out of there. So, and what status they're at with those productions. So you could see like Texas, for example, is going to be having the Model Y and the Cybertruck. The Nevada factory will have the Semi, and then we're going to have a Tesla Roadster and also robo-taxis. Then I put down here like how big the industry size is for the global energy business and also the automotive industry. The automotive industry is about $3 trillion, which is by far the largest. And that's what I was pointing out earlier was that they're in two of the biggest possible industries you could be in. So let's say they get 10% market share in each of those. That's going to be $320 billion of revenue. Now, I put a price to sales of 8 only because that's what Apple normally trades at. And I think Apple is a good comparison for a stock like this. So that would put their market cap at $2.5 trillion. And then this is not counting whatever money they make from robo-taxis, self-driving, robots, the insurance business, and whatever other products they come out with in the future. So all in all, I am bullish on Tesla. Am I somewhat worried about the stock and what Elon Musk is doing? Yes, maybe, but I think this company is built up to a point where they have so much going for them and where their opportunities are so big that I'm going to hold on to it and see what happens in the future. So that is all. Comment down below and let me know what you think.